Hello Market Club members everywhere. Adam Hewison here coming to you from the digital studios of Market Club, and we have three stocks for you today. The first one we're looking at is CAR, which is basically the Avis budget group. What I like about this stock is two things. One, you have a really nice base we're building from. You can see that right here, which is a super base which extends several months. You have the resistance line right here. I'm drawing it freehand. We had the breakout yesterday. A monthly kicked in. You can see that kicked in at 47.75 right here. That's the first signal we've had, monthly signal, all the way back here in April, where we had a sell signal at 57 and change. And you can see it's had a nice move down. So it's almost $10 profit on that position, just on a simple trade triangle. Now looking at where we are now, you could take the lows, let's just say that 40, and we'll take the highs here, let's say at 47, just to be very conservative. So that would indicate a move to 54 to 55, somewhere like that range. So that's going to be our target zone for Avis, symbol CAR. Plus 100, very strong trend. Watch this stock very carefully. If it sees a pullback to the 47.75, be a buyer. And I would say if it closes like today, I would also want to be a buyer also, because Friday is coming up and we know what that means. This will be a very strong weekend for this stock. Next stock is Juniper Networks. The symbol is JNPR. As you can see, at plus 100, we had a signal yesterday at 29.13. It's 29.89 right now. And it looks as though it just wants to go higher. Something's going on with the sort of network markets, and I think this is a good start for this stock. Now we're looking for, let's say, the 25. If we go down to, let's say, the average, let's say the low price has been around 25. You can see right here, there's the 25 number right there, and you can see right around that level, it sort of finds very good support. So this is where the resistance was, right here, right around 29. So $4, $5, say $4 to be conservative, and you're looking at maybe 33 on the upside at target zone. So that's what we're looking for with this stock. So not a lot of play, but maybe about a 10% return, 15% return in the fourth quarter, which I think will be very nice. Very strong on the RSI, which is what we're looking at right here, well over the 50 line, but generally speaking, it looks really good. So let's see how that plays out. But plus 100 is always indicating a strong upward trend. Last stock we're looking at is Coca-Cola Enterprises, and the symbol is CCE. Now, what's interesting about this, we have all of our trade triangles green, which is good, plus 90, strong trend. And if you look at the Fibonacci from the highs to the lows right here, it's a perfect retracement. This is a 61.8% retracement right here, and you can see that's exactly what the low was. We kicked in with a signal to be a buyer on this with a weekly, not a monthly, on a weekly. So you've had the move up, you've had the pullback, a classic pullback, and now it's starting to move back up again. Now the symbol, the buy signal is 50.03. It's 49.71, so you can actually get it a little bit lower than where the original signal was at 50.03, 49.71, about 30 cents lower. So here we are over the 50 line, indicating a trend that's positive. All of our trade triangles are positive, plus 90 score, trending higher, looks good. Would want to be a buyer of Coca-Cola Enterprises right here. Symbol CCE. Gold continues to sort of tease everybody, but I think the line of least resistance in gold is going to be the upside. We're plus 60, indicating a trading range, but weekly and daily are positive, indicating a trend is up according to our strategy and our tools that we use for gold. Key, the monthly is still down, but that can change, and that would change, of course, if we were to go somewhere over the 1,170 level, and we're quite a ways from there. But generally speaking, we'd want to be long gold here as opposed to being short gold. This is the Dow. We had a signal yesterday. You can see I'll put that in for you right here at 16,933, indicating to be on the sidelines, not to go long, just to be on the sidelines. I was a little bit surprised at this signal, but that's what the markets do sometimes. But generally speaking, the trend continues to be somewhat choppy, a trading range, and I think that's where you have to be a little bit careful. So let's move on to the S&P 500. Again, that's still negative. Weekly and a monthly still negative. It's a minus 65, indicating a trading range. We are just above the 50 line, indicating it favors a little more strength perhaps coming to this market. But generally speaking, the trend is still clearly on the downside with our weekly and monthly in a red formation. Pretty much the same on the NASDAQ, weekly and monthly in a red formation, 65 trading range with just sort of bouncing along the 50 RSI line. Generally speaking, it still looks like this market wants to go lower, but you have to respect what the market's doing. And if you look at this market very carefully, you can see that we had a move that was very sharp on the downside right here. We had a pullback, and then we've had another pullback here, which I'm guessing is going to be right around 50%, maybe 61.8%. And the question is, where do we go from here? Is it up or do we turn back down? Right now, it's very hard to say, but generally speaking, we're dancing along the 50 line. Are two indicators that we rely on. The weekly and the monthly are still negative, indicating that the odds are on the downside. I want to see some proof that something else is going to happen there. On the euro dollar, plus 90, hard to believe, but the trend is for the euro dollar and not for the US dollar, meaning you should be long euro dollars, short US dollars. But again, we're dancing along the RSI, the 50 line, and we're sort of tightening up here. Let's just take a look at one thing very quickly. Let's just put in a close-only chart, which we can do very easily. And I think I would draw a trend line from the highs here down there. I would say if you break over that trend line, that's going to be a continuation to the upside. And if that happens, it's not going to be just a small move. It's going to be a little bit of a sharp, fast move to the upside. So let's see how that plays out. Next market is crude oil. Crude oil, as you can see, has had a sort of, we thought this was a continuation pattern. It's proven to be that. I'll show you why I say that. We had a move quite sharply back in late August. Right here, boom. Some of it was short covering, obviously, because we had a very strong move down here. So this is partly short covering, but partly new buying. And then we sort of settle back into this zone where the 44 level has become a very strong base for crude oil. And if we draw a trend line right here, you can see we've broken out. You can see that sharp update right there. We had a weekly there at 48.07. Currently trading at 48.21. I still think crude oil could go higher from where we are right now. A move over 50 would really get this market going. And if you look at this on a, let's clear the screen just for a moment and put in our Fibonacci, you'll go from the very, very high, I'm showing right here, to the lows. We could easily see a move to 54 to 55. So I think potentially I would not want to be short crude oil at this point in time. Hey, that's it for today. Look at those three stocks we talked about: Avis, Juniper Networks, and Coca-Cola Enterprises. I'm Adam Hewison for Market Club. Thanks for taking the time to watch the video, and every success with those stocks. Have a great trading day, everyone.